And then going across to gold and Bitcoin, bit of a sad sight, really. Let's go to the day chart on gold. I'm looking to load up a little bit more on gold if we can hold this 4-hour candle. But this is the support level. If we close beneath that level at 2470, I'm going to be immediately hedging my gold long positions. You can see our entries there and there, and I'll be hedging that completely and waiting to see what happens. We've got a little double bottom spike, call it a triple bottom on the 4-hour chart here. This is the day chart, sorry, and not the 4-hour chart. Let me just go back to this day chart, because there is a possibility that we'll follow the original path that I thought we could follow, and that's down to this longer term trend line on gold and this blob. Now I have to move this blob along a little bit more as we move along, as time progresses. And now that blob aligns with this order block and this 100-period moving average. So maybe gold's got to get down to 2,350. We're currently at 2,480. And if we close beneath 2,470, I will hedge this for a move down to 2,380, where I'll extract my short positions, take profit on those, and add to the long side using the profit from the short trade to bolster the long side and reduce the risk on the short on the long trade. So that's how you can use hedging, which we do cover in this course coming up on the 14th. Now let's have a look at this on the 4-hour chart. This is gold, and yeah, so there's that little triple bottom. Maybe on this 4-hour candle chart it looks okay, but we've got all these moving averages stacked above us. There's the 100, the 20, and the 50 all stacked above us. But maybe we've just formed a little reversal here. We've got 2 hours to go until the 4-hour candle rolls over. So I'll be looking for this candle to hold, maybe form a bullish engulfing candle, and possibly I'll add to my long position on gold if that happens. If not, and we close beneath 2470, I'll be doing exactly the opposite. I'll be selling some gold and hedging my long position completely. Now let's go to Bitcoin. I think the day chart, if we look at the 4-hour chart, it's going to make everyone a little bit nervous and scary. So let's look at the day chart. I've still got the same chart on here. As long as we hold above that level down there at 48 and some change, I'm remaining long on Bitcoin. I might consider possibly hedging if we close beneath 56,000 odd today. But let's see how we go. And in fact, I might not even do that, because we've got jobs today, we've got jobs tomorrow, we've got jobs on Friday, the big jobs numbers today and on Friday. So we've got this triangle that we're trading in, and we've tried to bounce off this bottom here, as you can see. I took a new long position a couple of hours ago at that level where you see the red arrow, and I signaled that to my private trading group. So we've got several positions on here, some from down there, some from around here, some from around here, and a new one this morning from at the bottom of this triangle. Now, this triangle I've just drawn in roughly. We want to see a breakout through this triangle. It's not a neat triangle. It's very, very, very messy, but it is trading within this longer term channel. And it's, again, not a parallel channel. It's not perfect. I suppose we could parallelize that channel if we wanted to. In fact, maybe I'll do that. I'm not even sure if it is a channel drawn in here, but let's see. No, I'm not going to bother with that now. I could straighten up that bottom channel a little bit by fiddling around to make it parallel to the top one. But the point is, we're trading within this channel. We're in the center of the channel, dead middle. Don't diddle in the middle. Don't make any rash decisions when you're in between two channel lines right in the middle like we are at the moment. We're also inside this potential triangle and testing the bottom of it. Like I said, it's not a neat type of triangle. It's random. I've drawn it because I like patterns on my charts, and I like to try and make sense through shapes, triangles being one of them, and Fibonacci's and all those sorts of things, other things I like to see in my charts. So are we going to hold here? I don't know. You know, the cheaper it gets, in my opinion, I remain a Bitcoin bull as long as we're above that spike low down there. If we do close beneath there, then I don't know how much further we could go, but there's plenty of space down below. There's a big order block down at 40,000. There's a Fibonacci level at 36. There are levels down in the 20s. Are we going to get that low? Probably not. But could we get down into 43,000, 47,000, 40,000? Possibly. Nothing's impossible in trading. Market always does things that you least expect. But for now, we're holding up quite well. We're at 56,500 and roughly at the price that I got into my last position, slightly below that.
Like a pancake, no hesitating. Buy low, sell high, nice dedicated. Crypto grind, dollar signs bright like Vegas stated. Bear market bull Smart traders try to keep it calm. Pump, dump, heart, dump, stress like a season-long prom. Hollow strong, diamond hands withstand the storm. Day trade craze up all night until the night's warm. Crypto dreams, pixel screen stacks elevated. Wallet dance, no bank trans, coins liberated. Satoshi go worldwide, most status traded.